gold's price moved higher since the beginning of the week. In today's report, we intend to lay out the main fundamental challenges laid ahead for gold's price, including the negative correlation of the dollar with gold's price, the release of the Fed's July meeting minutes, and the Jackson Hole Symposium. Finally, we will be concluding this report with a technical analysis of gold's daily chart. We make a start with the negative correlation of gold's price to the dollar. Overall, the weakening of the dollar against its counterparts on Friday the 16th of the month was reflected with a strengthening of gold's price, which reached new record highs. The same was the case on a weekly level for the past week, in contrast to the week before, where both trading instruments displayed a slight weakness. Hence, we intend to maintain our bias for the negative correlation of the gold with the dollar to be maintained in the coming week. At this point, it should be noted that the yields of US bonds tended to rise since our last report, and given the antagonistic nature of gold to US bonds, may have not allowed gold bulls to extend the rise of the precious metals price to its full potential. We expect that should US yields rise further in the coming week, we may see them weigh on gold's price somewhat. On a less fundamental level, we note that a number of analysts state that gold traders have already booked some profits from the recent surge of the precious metals price, which could imply that sellers may have eased their pressure, thus leaving more space for gold bulls to play. On a deeper fundamental level for the markets, we highlight the Fed's intentions as a factor that could also affect gold's price. The markets currently expect the Fed to start cutting rates in its next meeting in September and continue to deliver another rate cut in the November meeting and a double rate cut in the December meeting, according to currently two Fed fund futures. Despite the market's expectations, maybe overfetch its dovish orientation is very clear. On Wednesday, we get the minutes of the Fed's July meeting minutes. Should the document be characterized by a dovish tone, thus verifying the market's expectations, it could provide support for riskier assets, including cryptocurrencies. On Friday, we highlight the start of the Jackson Hole Symposium, and Fed Chair Powell's speech is expected to be closely watched by gold traders for any clues regarding the bank's intentions. As with the Fed's meeting minutes, any dovish signals from the Fed chair could support gold's price, and vice versa, any comments implying a less dovish path on behalf of the bank could force the market to reposition itself, adding selling pressure on the precious metal. On a deeper fundamental level, we also note the safe haven nature of the precious metal. Maybe the most interesting issue ahead for gold are the negotiations in the Middle East between Hamas and Israel with the mediation of the US. It should be noted that US Secretary of State Antony Blinken has brokered a possible ceasefire and a hostage deal, and Israel seems to be accepting it, yet on the flip side, Hamas has not answered yet. Blinken also noted that it may be the last chance for a ceasefire in the conflict, adding more pressure on the two parties to accept. Yet there seemed to be some thorn in the deal, such as the end of war as such that Hamas is seeking, while Israel tends to view the ceasefire as temporary, the Israeli control over the Gaza-Egypt border, the return of displaced Palestinians, the return of hostages, and of course the blame game, which in turn may not allow for a deal to be struck. Overall, should a deal be struck, we may see the precious metal suffering some safe haven outflows as an easing of market worries may emerge. On the other hand, should the ceasefire deal not be struck, we may see gold's price getting additional support as uncertainty over the developments in the area may be enhanced. Please note that both sides have made steps towards escalating the tensions in the area, for example, Hamas threatening to restart suicide bombing in Israel, while the possibility of Israel proceeding military action at the border with Lebanon should not be underestimated. On a technical level, we note that gold's price stabilized just above the 2,480 support line after reaching new record high levels. For the time being, we tend to maintain a bullish outlook for the precious metals price as the RSI indicator remains between the readings of 50 and 70, implying the presence of a bullish predisposition for the bullion. Also, we note that the precious metals price is forming higher peaks and higher troughs, outlining the upwards movement, which is supported by upward slope of the 20, 100 and 200 moving averages. Should the bulls maintain control over the precious metals price, we set as the next target for gold bulls the 2,600 resistance level. Yet we know that the precious metals price is practically in uncharted waters and stabilized after the price action hit the upper Bollinger Band. Should the bears find a chance and take over, we may see the pair breaking the 2,480 support line and aim for the 2,390 support base. Thank you for being with us for today's financial update. We wish you solid trading from all of us here at Iron